Gold. It's a word that evokes images of luxury, prosperity, and power. From the gleaming tombs of ancient pharaohs to the opulent palaces of kings, gold has held a prominent place in our collective history. Throughout the ages, gold has served as a universal form of currency, a symbol of wealth, and a strategic asset. In times of economic uncertainty, political turmoil, and financial crises, people have turned to gold as a safe haven for their wealth. Today, as we navigate the complexities of a rapidly changing world, gold continues to hold relevance as a strategic investment. With rising inflation rates, geopolitical tensions, and volatile financial markets, many investors are seeking ways to protect their wealth. Gold, with its historical track record of preserving wealth, is often seen as a hedge against inflation. In this video, we'll delve into the reasons behind gold's enduring value and explore its role as an investment hedge against inflation. Before we delve into the role of gold in mitigating the risks of inflation, it's crucial to grasp the concept of inflation itself. Inflation is a rise in the general price level of goods and services in an economy over a period of time. This seemingly subtle increase in prices can have a profound impact on our financial well-being. As prices rise, the purchasing power of our hard-earned money diminishes. Understanding the causes of inflation is key to comprehending its implications. One primary driver is the increase in the money supply. Another significant contributor to inflation is demand pull inflation. This occurs when there's an increase in demand for goods and services, outpacing the economy's ability to produce them. Cost push inflation is yet another culprit. This type of inflation arises when the costs of production increase, forcing businesses to pass those increased expenses onto consumers. The consequences of inflation are far-reaching, impacting individuals, businesses, and the overall economy. On a broader scale, high inflation can destabilize economies. When inflation spirals out of control, it can morph into hyperinflation, a devastating economic phenomenon characterized by extremely rapid and excessive price increases. While hyperinflation is an extreme scenario, it underscores the importance of addressing inflation and its root causes. This is where gold, with its historical resilience and intrinsic value, enters the picture as a potential safe haven. In a world of intangible assets and digital currencies, gold stands apart with its undeniable tangibility. Unlike stocks, bonds, or cryptocurrencies, gold is a physical object with intrinsic value. This inherent tangibility gives gold a sense of permanence and security that many find reassuring, especially during times of economic uncertainty. It's a tangible asset that has weathered the storms of empires and financial crises for centuries. This inherent resilience stems from gold's unique properties, its scarcity, durability, and divisibility. Gold's track record as a store of value is unparalleled. For millennia, it has served as a reliable medium of exchange and a safe haven asset. From the Roman Empire to the Renaissance, from the Industrial Revolution to the digital age, gold has consistently held its value. This remarkable consistency underscores gold's ability to preserve wealth across generations. With central banks around the world engaging in unprecedented monetary expansion, the value of fiat currencies is being increasingly called into question. In contrast to fiat currencies, which are essentially government-issued IOUs, gold is a tangible asset with intrinsic value. It cannot be printed at will by governments or devalued by central bank policies. This inherent independence from government control is a key reason why gold is often seen as a safe haven asset during times of economic or political turmoil. As the value of paper money declines due to inflation, the price of gold tends to rise, acting as a counterbalance. To truly grasp how gold acts as a hedge against inflation, we need to examine the historical interplay between gold prices and inflation rates. Time and again, we see an intriguing pattern emerge. As inflation rises, so too does the price of gold. When inflation rears its head, the purchasing power of our money erodes. This unsettling reality prompts investors to seek assets that hold their value, assets that act as a bulwark against the relentless tide of inflation. Enter gold, the timeless safe haven. History is replete with examples of gold shining brightest during periods of economic turmoil. Let's rewind to the 1970s, a decade marked by stagflation, a toxic combination of stagnant economic growth and soaring inflation. Amidst this economic storm, gold emerged as a beacon of stability. As inflation chipped away at the purchasing power of the dollar, the price of gold soared, reaching unprecedented heights. This historical episode serves as a stark reminder of gold's ability to preserve wealth during periods of high inflation. It's important to note that gold's appeal as an inflation hedge transcends borders and cultures. Central banks around the world, tasked with managing their nation's monetary reserves, hold significant amounts of gold in their vaults. This strategic allocation reflects gold's enduring role as a reserve asset, a safe haven in times of economic uncertainty. The enduring value of gold, its historical track record as an inflation hedge, and its global acceptance make it a compelling addition to a well-diversified investment portfolio. For many investors, the most intuitive and emotionally satisfying way to invest in gold is by owning it in its physical form. Holding a gleaming gold coin or bar in your hand provides a tangible connection to this ancient store of value. Physical gold can take various forms, each with its own appeal and investment characteristics. However, investing in physical gold comes with its own set of considerations. Storage and security are paramount, as gold's value makes it a target for theft. For investors seeking a more liquid and convenient way to gain exposure to gold, exchange-traded funds, ETFs, offer a compelling alternative. Gold ETFs are investment funds that track the price of gold. They trade on stock exchanges, just like individual stocks, making them easy to buy and sell through brokerage accounts. One of the key advantages of gold ETFs is their diversification. Another indirect way to invest in gold is through mining stocks. In recent years, the advent of digital technology has ushered in a new era of gold investment. Digital gold. These platforms allow investors to buy, sell, and store gold digitally, often through mobile apps or online platforms. One of the key advantages of digital gold is its accessibility. Investors can buy and sell gold with ease, 24/7, from anywhere in the world with an internet connection. However, investing in digital gold comes with its own set of risks. Section 4. Choosing your golden path. A matter of strategy. The best way to invest in gold depends on your goals, risk tolerance, and financial circumstances. Physical gold offers security but comes with storage and liquidity considerations. Gold ETFs provide convenience and liquidity but lack the tactile experience. Mining stocks offer higher returns but are more volatile. Digital gold provides accessibility, but choose reputable platforms. Conduct thorough research and consult a financial advisor before investing. Learning from the past. To appreciate gold as an inflation hedge, let's revisit the 1970s. This decade was plagued by stagflation, a mix of stagnant growth and inflation. The U.S. grappled with soaring oil prices, rising unemployment, and a depreciating dollar. Investors sought refuge in tangible assets, with gold emerging as a prime destination. Gold's price skyrocketed from $35 per ounce in 1971 to $850 in 1980. This surge showcased gold's ability to act as a store of value during intense inflation. Let's turn to the insights of renowned investors and economists who have witnessed firsthand the role of gold in navigating economic storms. Warren Buffett, often hailed as the Oracle of Omaha, has famously advocated for the importance of owning assets with intrinsic value, assets that can weather economic downturns. While Buffett's investment philosophy doesn't solely revolve around gold, he recognizes its historical significance as a store of value. Similarly, Ray Dalio, founder of Bridgewater Associates, one of the world's largest hedge funds, has emphasized the importance of diversifying portfolios with alternative assets like gold, particularly during periods of economic uncertainty. These seasoned investors, with decades of experience navigating market cycles, understand that gold's role as a hedge against inflation is not merely theoretical. It's a time-tested strategy that has helped preserve wealth for centuries. Section 3. Navigating the future. As we stand at the crossroads of a rapidly evolving financial landscape marked by geopolitical tensions, technological advancements, and unprecedented levels of government debt, the question arises: does gold still hold relevance as an inflation hedge? While no one can predict the future with certainty, many analysts believe that the factors that have historically driven demand for gold inflation, currency devaluation, and economic uncertainty are likely to persist in the years to come. Central banks around the world continue to expand their balance sheets, raising concerns about future inflation. Moreover, geopolitical risks, such as those stemming from rising global debt levels and political instability, can further fuel demand for safe haven assets like gold. In an increasingly complex and interconnected world, gold's role as a hedge against systemic risk should not be underestimated. Section 4. Gold's enduring relevance. The decision of whether or not to include gold in your investment portfolio is a personal one, contingent upon your individual financial goals, risk tolerance, and investment horizon. However, understanding gold's historical role as an inflation hedge, its ability to preserve wealth during times of economic uncertainty, and its enduring appeal as a tangible asset, can provide valuable insights for investors seeking to navigate the complexities of today's financial markets. Gold's value proposition extends beyond its potential as an inflation hedge. It can serve as a portfolio diversifier, reducing overall portfolio volatility due to its low correlation with other asset classes like stocks and bonds. Moreover, gold's safe haven status can provide peace of mind during periods of market turmoil, knowing that you hold an asset with a proven track record of preserving wealth. Section 1. The golden thread. We've journeyed through history, exploring gold's enduring allure and its ability to weather economic storms. Gold has provided a safe harbor for investors seeking refuge from inflation. From ancient empires to the digital age, gold's allure remains timeless. Its scarcity, durability, and ability to hold value make gold unique. Unlike fiat currencies, gold stands apart, a testament to enduring value. From physical gold to ETFs and digital platforms, options cater to diverse investment styles. Charting your course to financial security. Investing is about safeguarding your financial future, navigating market complexities to grow your wealth. Gold, with its historical value, can provide stability and peace of mind during turbulent times. However, no investment is without risk. Gold prices can be volatile, influenced by market sentiment and geopolitical events. Consult with a financial advisor and assess your risk tolerance. Knowledge is your most valuable asset. Educate yourself about gold investing. Like, share, and subscribe for more insights. Together, let's navigate the path to financial security.